Something absolutely massive just happened that barely anyone is talking about. And I think this is one of the most important things you need to understand right now if you have any money in Bitcoin, Ethereum, or basically any other cryptocurrency. The Bank of Japan just announced they might be raising interest rates for the first time in decades. And when that news came out, Bitcoin fell from $90,000 down to $83,000 in just a couple of hours. Now, I know what you're thinking. Come on, Japan is on the other side of the planet, so why would their decision affect my crypto portfolio? That's the million-dollar question. And honestly, it's the answer that is going to shock you, because it appears Japan has been basically funding the entire crypto market for decades without anyone realizing it. Let me explain exactly what I mean here, and I promise this is going to make sense by the end of this video. So first, let's talk about what actually happened in Japan. On December 1st, 2025, Bank of Japan Governor Kazuo Ueda gave a speech. He basically said that if the data continues to evolve in line with our forecast, they will accordingly continue to raise the policy rate. Now, to regular people, that sounds like a bureaucratic speak, right? But to professional traders, investors, hedge funds, and institutions, that basically means Japan is definitely raising rates at their next meeting on December 18 and 19. And look, I know that doesn't sound crazy because the United States has been raising rates for years now. But here's the thing, Japan has kept interest rates basically at zero or even negative for the last 30 years. That's a really long time. Think about it. Someone could have been born, gone through college, started a career, and had babies, all while Japanese interest rates stayed close to zero. So when the news came out that Japan might actually raise rates, the bond market went absolutely crazy. Now, you might be wondering, why does this matter for crypto? Well, this is where things get really interesting, and this is where I want you to pay close attention. For the last 30 years, people have been using Japanese yen to buy Bitcoin, to buy stocks, to buy bonds, and basically to buy anything they could get their hands on around the entire world. This is something called the yen carry trade. But let me break down what that means in a simple way. Imagine I give you a loan right now at 0% interest. That's basically what Japan has been doing to global investors for decades. So you take my 0% loan and then you take that money and you go invest it somewhere else where you can actually make more money. Maybe you invest it in Bitcoin, which can return 5, 10 or even 50% a year. So you're basically making easy profit because you are borrowing at 0% and earning higher. It's basically free money. That's the carry trade in short. Here's the problem though. If interest rates in Japan go from 0% to let's say 2%, suddenly that free money isn't so free anymore. Now you are borrowing at 2% and you still need to make enough profit to cover that cost, plus make an actual return. That kind of change the entire game. Here's what makes this even more intense. It's not just Japanese interest rates that matter, it's also the yen itself. When interest rates go up in Japan, money starts flowing into the Japanese economy, right? Because investors want to get those higher returns. When money flows into Japan, the yen gets stronger. And when the yen gets stronger, traders who borrowed yen in the past to buy risk assets like Bitcoin, suddenly they have a problem. They basically borrowed yen when it was weak, and now it's getting stronger. So they have to repay more money than they originally borrowed. It's like borrowing $100 when the dollar is weak and then having to repay when the dollar is suddenly strong. You are losing money on the currency exchange alone on top of the interest rate. So when the Bank of Japan made that statement on December 1st, the market realized that some speculative assets had been partially funded with borrowed yen at basically 0%, and that's about to end. As a result, Bitcoin dropped $6,000 in like one day. Now, the traders call this the unwinding of carry trade positions, and we've actually seen this happening before. Back in late July 2024, the Bank of Japan surprised everyone with a rate hike of 0.25%. What happened next is that Bitcoin crashed from $65,000 down to $52,000. The Nikkei, which is Japan's stock market, dropped 22% in 3 days. But then the market recovered because traders realized maybe this was just a one-time thing and they started loading up again. Now, here's where it gets really important for you as someone who might have money in crypto. Part of the crypto market is built on this borrowed Japanese money. I am not even exaggerating. Without the carry trade, cryptocurrencies wouldn't have had the same explosive growth over the last 10 years. So when Japan ends that funding, which they are doing now, the entire crypto market has to readjust. And the adjustment isn't always smooth, alright? What this basically means is that if you are invested in crypto right now, you should exercise proper risk management. Now, you might be wondering, okay, but aren't US interest rates also changing? Yes, they are. The Fed is actually cutting rates while Japan is raising them. This is a big change, alright? The current interest rate difference between the US and Japan is still around 3.5%, which is still attractive. But if the Fed continues to cut and Japan continues to raise, that difference is going to shrink, and when that difference gets too small, the carry trade becomes unprofitable. When it becomes unprofitable, traders close their positions and sell part of the assets they bought, and that's bad news for risk assets like cryptocurrencies. But here's the thing that I think is really important to understand. This doesn't mean Bitcoin is going to zero. This doesn't mean crypto is dead. What it means is that one of the big things that was supporting the market is simply going away. In the short term, that's painful. Prices fall, liquidations happen, people panic. But in the long term, this could actually be good for cryptocurrencies because it forces the market to find real value. There is also another thing that's happening at the same time. Global liquidity is changing. When people are closing carry trade positions to repay yen loans, they have to sell something, right? They are selling stocks, they are selling gold, they are selling crypto, and they are converting everything back to yen to repay the loan. This is creating this massive change in capital flows. Money is flowing out of risky assets and back towards safety. That means Bitcoin might not be as attractive in the short term because people are forced to raise cash. But here's what I find really interesting. Over the long term, this could actually change how people think about Bitcoin and cryptocurrencies. Right now, Bitcoin and other crypto assets are still considered speculative or risky investments, right? But as traditional funding sources like the yen carry trade disappear, investors are going to have to reevaluate what Bitcoin actually is. Is it just a speculative asset that rides leverage cycles, or is it actually a form of money that can stand on its own? That's the fundamental question that gets answered over the next few years as Japanese rates normalize. Now, according to the market expectations, the Bank of Japan could raise rates to as high as 1.4% over the next few years. Meanwhile, the Fed is expected to cut rates by another 1.5%. This widens the gap going the wrong direction for carry traders. When that happens, we're probably going to see more pressure on crypto markets. But like I said, this isn't necessarily bad long term. Now, what should you do with this information? Well, if you're a day trader, you need to be aware that Japanese monetary policy decisions are now as important as the Fed decisions for the direction of Bitcoin and cryptocurrency. If the Bank of Japan stays aggressive with the rate hikes, expect more downward pressure. If they pause and signal they are done raising rates, expect recovery. If you are a long-term investor, I think the key thing to understand here is that the structure of the market is changing. The era of free yen-funded leverage is ending. That doesn't mean Bitcoin is going down forever, right? It just means that the mechanisms that drove prices up in the past are different now. Going forward, Bitcoin is going to have to attract investors based on its technology and as a store of value, not just because it's the highest yielding speculative asset you can buy with a yen loan, right? So look, here's my take on all of this. I think what's happening right now in Japan is actually positive for Bitcoin long term, even though it looks really negative in the near future. This is the market cleaning itself up. This is the market removing one of the artificial things that was supporting prices. And yeah, that's going to be painful in the short term. But long term, I think it makes Bitcoin stronger because it forces the market to develop a real demand from real users and real believers, not just from people who are trying to arbitrage the interest rate difference between two countries. But I get it if you disagree with that perspective. So what do you think? Do you think Japanese interest rates are good or bad for Bitcoin and crypto in the long term? Let me know your thoughts down in the comments below. And as always, thanks for watching and I'll see you in the next video. Bye.